Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. In the grains this morning, we've got corn and wheat higher, soybeans trending lower. We've seen two-sided trade in the cattle, but are starting to fade a little bit. Hogs, they've been lower most of this session. And Scott, thanks for joining us. I want to talk about this corn market. We're back up this morning. We had more China business. Export sales were good as expected. And so have we turned the corner on that market? The one concern I have is that funds are short in this market and, are they going to go shorter?
Thanks for having me on. And yeah, the corn is finally reacting to some of the business that it's got from China and, strongly led by the front month here. So it's not like we've got the whole sector of corn really turning around and trying to rally. It's mainly coming out of the May contract. And as we got low enough, we saw the basis getting a little bit stronger in some areas. So it just proved that demand is still there for the upfront on this corn, even though everybody's leaning, funds leaning, pipeline's going to get filled. We're still at a higher price. We're just not ready to turn the page to that as a long-term spec quite yet. We're still looking at this old crop and led by the May and July, eerily far behind the May contract when you're looking at a 13-cent difference there,
right.
or bigger 22, I guess, excuse me for a dime off there, but looks like we're not ready to give up on this demand yet. So the front's continuing to rally it up. And we're kind of in that little bit of a window when we don't have South America weather to talk about as much, and we're moving into our acreage report. So to me, the funds would wait to answer your question. The funds might want to wait till we get some new news, start to look at some acreage, start to pencil some maybe trend line yields against some acres and figure out what that ending stock number could be. Because if it's down to a 1.3, I don't know if that's tight enough for the funds to want to really extend their short position too hard, in my opinion.
Well, and conversely, if you talk about planting delays with them short, and we have any delays in planting corn, which we could up in the north, you could get a recovery rally pretty quickly here in that market.
Yeah, I guess that is a possibility. Planting delays, unfortunately, is one of my least favorite things to trade.
Okay, yeah, sure. I know.
It's like nails on a chalkboard to me, but that's okay. We something that we talk about and we trade every year, and it's still the end of March, but we're still looking like it's going to be a little bit of a struggle to try to get in there and try to get stuff planted. So it's going to be in the market generally. We're going to have some much bigger worries, I think, before that starts. So I'm not worried about planting delays yet, but yeah, I'm sure there's going to be some market talk about it with all of the moisture that's still around.
Yeah, there already is. So that's why I'm throwing it out.
Got another 6 inches of snow here just last night. So unexpected.
Yeah. Soybeans, conversely, the funds are still long there. They're still long in the meal market. We have broken below the 200-day moving average and exports have slowed down. Are you concerned we're going to see more selling pressure in that market?
Really underperforming what I thought it really could. No, I guess I didn't think that there would be. I thought that would be one market with the rest of the grains kind of taken off, that we'd be able to kind of turn the corner. As you see some of these oversold conditions, and that's one of the markets that can really try to turn around when somebody's looking for a market that's going to move fast. And if you throw that market in the mix, they love to trade it because it can move quite a bit. So I like it from here. I think we'll be able to get a little bit of bounce here. We still have to look at acreage battle here as well. So that I think they're still going to be not giving up the fight from that standpoint.
Yeah. Do you have any early guesses here in terms of acreage next week? Everybody else is throwing out numbers.
Oh, I'm not going to throw any numbers out. I'm not real sure. I think corn's going to probably get a pretty heavy lean, in my opinion. To pencil it down to the exact number, I'm not sure, but that's why I also think the beans need to rally a little bit here, because in my opinion, they're not getting enough of the acres. So I think corn's going to kind of get its eyes opened up when we have a extremely large number there.
No, I'm with you, especially with as tight as ending stocks are on soybeans and the demand domestically still coming at the market. So cattle market, we've seen already some two-sided trade, but I would have to say here, as we're starting to fade in this live cattle market, kind of disappointing considering we did have some higher cash trade in the north. And please talk about where that cash trade developed.
Yeah, we've got some news happening in the cash, and they're underperforming today what I thought that they would. we're kind of entering into, after a pretty severe break and in all of the commodity markets, and live cattle, feeder cattle were not left alone. So they had a little bit of a break. And the only worry before we step there, we're all looking at the fundamentals and feeling friendly. But every time we have this outside market news kind of making headlines, we get a little bit nervous, because that's the one thing that we're worried about in the livestock markets that could really break things and give us a pretty good correction, because our fundamentals are good. Our cash news started to pick up the pace yesterday. Started with a little bit of 163 in the south. There was, some meat trade around, but there was a lot of late live trade that happened yesterday that helped the market. So 165 in the midday is what started it to a major, and the futures reacted, liked that news, rallied off of it. And after the close, we started to see some 166 in some of this northern sector, and then as high as a 167 with one of those hashtags, don't tell anybody that you got this, but the market, that news got out. We're talking about it. So we had some really good trade. I think a lot of the cattle guys were looking at it this morning thinking that it's probably a time to get in. Let's get some of these longs on. And then here we sit steady to a little bit lower. So I think it's a little bit disappointing. The things I like about the market is we've got this positive basis. Cash is trying to be the leader. And you've got the front months. You've got some bull spreads starting to work. Front months outpacing the back months. We've just continued to have that market where some, the funds want to buy out in the deferred because we're going to get tighter. We're going to get tighter later. But now the front is starting to lead. And even though they're killing 127,000 a day, the cash is still staying good. So we're mowing through them and feeling like we're only going to get tighter throughout the year. And we get beyond this yearling crop. That's when we move on to the next year's crop, the calf crop. And we just think that continues to get tighter. So every calf crop that we come up to should be less numbers for us to look at.
So you talked about, the risk aversion in the market on the meat sector. And obviously it's not only impacted cattle, but it's impacted hogs, not only the banking situation, but yesterday's Fed announcement. Right now, hogs aren't trading necessarily fundamentals either, but we're so oversold. Are we getting close to a point where we can bounce?
Yeah, that hog market, when they trend, and they're on a steep downtrend and have not found a bottom yet. It seems like every day you have some bottom pickers coming in trying to find the low spot, but the open interest continues to grow. So as these index funds or what have you continue to sell this market, they're adding shorts. We're growing the open interest. If you see a big flush lower, and if you see the open interest start to decrease, well, that's just somebody blowing out some trades that are getting cleaned up. But this is somebody adding positions, continuing to pressure it down. And we haven't seen that story or that key reversal higher that wants to scare some of those guys that maybe think they're short just a little bit on the low side. And so you look at a price that's quite a bit lower than where we have been in a while. So $88, $90 on some of these summers. And it feels like, we could turn this around from here, but it's not that many years ago. You got to 90, you felt like that was a pretty good trade, and you were maybe looking to do some hedging. So maybe that's the way they're looking at it, that we're still, at some levels that are okay in the history. But we're going to come up on some long-term ranges here down in the low 70s. If we decide to take that out, there's going to be some really rough long-term chart damage.
Okay, well, let's hope we're getting close. Thanks so much for joining us, Scott Varilek with Kooima Kooima Varilek, and that's Markets Now.